All right, guys. We are here today. Good morning. Hope you guys are doing great today. We have PCE inflation. It's Friday. It's the end of my super busy week. We are here today. Good morning. Hope you guys are doing great today. Yeah, so it's the end of my really busy week, man. We've had a crazy busy week that I'm honestly genuinely like exhausted from. But that week is now over. Basically, I finished everything I needed to finish. We did Apple, we did Apple, Tesla, Meta, Microsoft earnings, Fed meeting, GDP data, PCE data today, and we finished the video we were working on. So we got it all done. You're welcome. And yeah, today we got PCE inflation data. It's a pretty big relevant report that you want to pay attention to. Sorry, let me get this. Core PCE inflation data releases live here at 8:30 a.m. Yeah, and PCE today is expected. Core PCE is the big one. It's the one you want to pay attention to. It's what everybody else is going to be paying attention to. It's expected at 0.2% month over month. So there we go. Again, you can kind of see the core PCE inflation thing. We'll lower ourselves here. There we go. And yeah, you can see Apple's still up pretty big from their earnings. Pretty big gap up all around for Apple. You know, they originally had a negative reaction, and then during the earnings call, they gave a little bit of guidance numbers, and the market just loved it. They ripped up SPY up to 608s following Apple's, tune here. All right. All right, guys. Okay. All right, guys. Sorry, I gotta do one thing. Let me take a picture of this. Sorry, I'm in the process of paying my taxes. Yeah. They're not cheap. They're not cheap taxes, guys. You don't love to see it. All right, guys. Yeah, PCE inflation data 8:30. Let me get a timer up. We'll do a poll live like we always do as well. These are property taxes that I'm paying, by the way. They're not cheap. Kind of crazy, honestly. Okay, good. In my opinion, we're going to be hot PCE, prepare for some dumping, but the real bump up in PCE will be next time when all the tariffs will get puts. I'm not going to do that. I don't know. I don't think it's predictable in that regard. Is there a scammer in our Discord? Yeah. Triple top the spot, maybe. Let's go PCE. Hey, what's up, chat? Hey, good morning, good morning. Let me do a poll here. Does core PCE inflation come in higher or lower than expected? Than the 0.2% month over month expectation. Higher, lower. Vote on the poll. Let me know what you think for core PCE. Remember, core PCE is the big one. It's the one the Fed looks at. 1,500 square foot in Canada, property tax is $7,500 a year. Well, ours doesn't have to do with our square footage. It has to do with the home price, the assessed value, right? And it's kind of crazy because, like, okay, here's an example of property taxes in Texas. Say you have $1 million house in Texas. You're going to pay in some places 2.5% a year. $25,000 a year for that $1 million home property. It's obscenely high. It's ridiculous. It's unnecessary. People are always like, oh, Texas, great income tax. No income tax state-wise. And it's like, yeah, that's true, but they make it back on property taxes. I don't know. Somebody's asking, why is Microsoft so weak compared to the other big tech? I don't know, honestly. I think Microsoft initially had a bad reaction to earnings and never really came back from it. Investors saw something in their earnings report that they just did not like for Apple, and Apple is now down big. So put 4K into Apple yesterday. Hey, good luck, bro. Yeah, dude, here, I'll ban all the scammers, and I'll also make a group-wide post telling people that there's lots of scammers, and then if somebody tries to respond afterwards, I'm just going to ban them. Or not ban them, but I'm just going to delete anything they say. All right, yeah, there we go. We made the post to our Discord. Trying to warn people. Not Apple, you said Microsoft. Put 4K in Apple yesterday. Why is Microsoft so weak? Yeah, no, Microsoft's down. Something bad they saw in earnings. The poll says 59% currently, 41% on the lower side. So most people think inflation's going to come in hot. All right. Yeah, and really we got an hour and 15 minutes. All right, guys. There we go. So we got the timer up here. We got about an hour and 12 minutes left. We'll stick this like right here. But yeah, Apple up big. One of the big stories. London unable to deliver gold. There's a gold shortage. CapEx lower. Wrong. Sigh. So if core PCE is higher, it means higher inflation. Yeah, actually, yes, you're correct. I'm sorry. So if core PCE is higher, market will be sad probably because number one, it means higher inflation. But number two, high inflation means the Fed is going to be less likely to cut rates because cutting rates might cause inflation to get worse, not better. If that makes sense. So you're correct. That's correct. Sorry. 4% is ridiculous. Other top 10 companies from NASDAQ did at least 40 to 50. And what? $7,500 is actually pretty cheap at a $2 million house mark. Again, a $2 million house where I live is going to be 50K. I don't even have to do it. Sorry. It's going to be 50K, which is obscenely high. It's 2.5%. It's going to be 50K here a year in Texas, which is crazy, you know. It's just not sustainable. It's like, dude, like people buy houses because they want to be able to have like financial independence, and like being strapped to like a ridiculously high tax bill kind of moots the point of it, you know? Like, yeah, you're not paying rent, but you're paying the equivalent of rent or more in super high taxes in Texas. And I know I'm from Louisiana, it's not like that. Like the taxes aren't nearly that high. Right, for sure. Exactly, Sai. Oh, man. I'm up. For a $2 million house, yeah. It's literally a salary. Like a freaking salary. And then honestly, next week we got a bunch of stuff too, man. Next week we got ISM manufacturing PMI on Monday, JOLTS job report on Tuesday, Wednesday ADP non-farm employment change, ISM services, Thursday jobless claims, Friday non-farm payrolls and unemployment data, and then I think the next week we have CPI inflation after that too. So like it's busy. All right, guys. So yeah, honestly, I'm really excited. We got a video debuting after the stream. Let me get my Filmora thing up. All right, guys. So bear with me. I'm gonna slowly listen to some of this video to make sure it's good. I think it's pretty good. Let me mute the background here and find like a bigger window for this thing. There we go. All right, I'm gonna have to mute the background for a little bit. All right, guys, but yeah, look at the SPY. Look at Apple still ripping up at 247. Let's see if we can break 250. I know one thing I should add. There we go. I should probably keep that up. Okay, yep. Let me pull the chat up. Let me pop the chat out. I'm thinking of buying Apple call. Let's go. Hey, I would be careful buying up. I mean, do what you do, right? It's all good. Yeah, hit the like button, guys. We appreciate it. I like you say lifetime highs. Well, yeah. It is. It's lifetime highs. Yeah. Yeah, with our Discord growing, that's the kind of stuff we're going to run into. So, like, with our Discord growing and, like, all these bots here, that's what we're going to run into. All right, chat. All right, chat. So again, we're sitting here waiting on some good edge today. Good edge. We're gonna try to day trade. How do you become part of your group? Our group is free. It doesn't cost anything. I mean, there's no group. Yeah, the music's coming, guys. Give me a second. Music's coming. Again, Microsoft did not react good to earnings, man. It's kind of shocking how much Microsoft is down. John, do you think the stock market is going to crash? Eventually it will, but I think the market might correct. It's a might. Like, people hear me say the market might correct in the next year or two, and they're like, "Oh, the perma bull is bearish." And I wouldn't even say I'm bearish. I just think that it's time to correct a little bit based off of how much we're up in the last 2-3 years. I just think it's time to correct. Now, that doesn't mean we're going to correct. It might be confirmation bias in that, like, I'd like a correction to get some cheaper value. But I just think the market's up a little bit too much at this point in time over the past few years to continue running up big, in my opinion. But again, the market is a different animal. Nobody freaking knows. The variance is high in terms of predictions. It's one of the reasons I criticize people who act like they absolutely know something's going to happen. Like, people always act like they know what's going to happen. They know what's going to happen if they criticize and shame and do all this different stuff, but nobody freaking knows. And so you got to have that context in the mind. Like, nobody knows. Maybe the market crashes in the next few years. Maybe it doesn't. Maybe it corrects like 10% or more in the next few years. Maybe it doesn't. But I'm not interested in buying right now is the overarching point I'm trying to make. I'm not interested in buying up anything too high. Market's too high. Most things are too high right now. And so I'm going to wait until we get a good pullback. Is there a delay of information that explains the discrepancy? Somebody's asking if I know Dow Theory. Yeah, Dow, created by Charles Dow, basically all the different phases, primary, secondary trends, accumulation, distribution phases. Yeah. I like the Dow Theory. I think it simplifies things when you look at it. Let me see if I can find a... Yeah, three phases of market trends: accumulation, public participation, and distribution. The Dow Theory uses averages like the Dow Jones Industrial Average and the Dow Jones Transportation Average to confirm trends. It says that volume must confirm the direction. It uses confirmation, says that a trend is only valid if it's confirmed by similar movement in multiple different averages. Charles Dow founded this, founder of the Wall Street Journal and the Dow Jones Industrial. He created it. It's an important foundation of technical analysis. Yeah. So yeah, the Dow Theory. I use Forex brokers, but I also recently started using futures. What does the gold futures chart often move in the opposite direction of the Forex charts? Because it depends on which one is first size. So in the Forex pair, if you're looking at it, whichever pair is first is the dominant pair. Yeah, whichever pair is last is what it's based with. Like we're used to looking at things in terms of US dollars, right? Like their price relative to the US dollar. So it depends on what the dominant pair is that you're looking at. If you have it backwards, then it might move exactly the opposite of gold because, you know, because it's not the dominant one that we're looking at and we're not looking at it in US dollar terms. It just depends. Real estate investment trusts are looking good. What do you think of the rate cut and the real estate investment trusts? We didn't cut rates, Irvs. We paused rates. Have you seen the divergence between transportation and all the other stocks? Basically, the Dow Theory. What do you mean in transportation stocks? Car stocks or airplanes or more? Yeah, it just depends on what you mean by that. It crashes every 10 years. It is necessary. I don't know if it crashes every 10 years. It's not that consistent. Sometimes it crashes earlier than that. Sometimes it crashes longer. Like an example, we had the dot-com crash 2000. Boom. That was in 2000. In 2008, we crashed again from the mortgage disaster. And then we didn't really crash until 2020, right? So for 12 years, we didn't really crash until 2020. And in that regard, if you call 2020 a crash, then it's only been 4 years since the last one. If you don't call 2020 a crash, then it's been since 2008. So it's been 17 years since we crashed. And so it depends on the context that you're looking at in terms of like how long it's been since we crashed. And yeah, it just depends on whether you consider 2020 a crash. If we take a look back at 2020 here on the SPY, that is. This is the 2020 I'm talking about right here. And like the difference here is like, number one, you can look at this. This is a crash, right? Like in terms of price action and percentages in 2020, I call this a crash because in 2020, we went from what to 340. We went from 340 all the way down to 220, which is a percentage drop of 35%. Right? I consider that a crash. Some people are going to consider it a mini crash. We rebounded really, really quick from it. Really, really quick. But again, on the SPY, we dropped 35%. 35%. Now, the difference between a crash and a correction is this, okay? Crash, flash, boom, big drops, steep decline. A correction is more like this here. So here is 2021. This is 2021, right? And in 2021, right here, we dropped from about 475 in the SPY all the way down to 350. So again, 475 down to 350. And percentage-wise on the correction, we dropped 26% over a longer period of time. That's a correction, right? And so that's why when I hear people say, hey, I think we might correct, right? Doesn't necessarily mean we're going to flash crash down there quickly. It just means that, like, I think we're going to pull back a little bit. Might be 10%. Generally, once a year, we drop at least 10%, right? But again, guys, as I always tell you, I have no freaking idea what I'm talking about. I might be wildly wrong about anything and everything I say. Do not copy me. I'm not an investment professional. I'm not liable if you lose. Always make your own assessment, trade responsibly. I can't guarantee anything. I do trade off stream. Sometimes I lose off stream. I don't even claim to be a good day trader. Don't copy me. I have no freaking idea what I'm talking about. And understand CFTC 4.41, hypothetical or simulated performance, have limitations, guys. Not an investment professional. And so I hope all that makes sense. With that, that's the context I'm looking at things. Maybe we should do a poll on whether you think we crashed in 2020. Yeah, maybe I should do a poll. Average of 10 years sounds about right. That's probably right about average. Yeah, I almost always stream on this time, Steven. The verdict is today will be bearish, John? No, that's not my verdict for sure. What's with all the deleted posts? Top 3 worst ever in the world. John, what are you saying? Today we crashed? No, that's not what I'm saying, bro. What are y'all talking about, dude? Who said that? I said maybe sometime in the next few years we crash is what I'm saying. Or correct, really is what I said. Correct. Yeah, that's all I mean, guys. I certainly don't mean that we crash today. All right, guys. Iceberg ahead. Yeah, I mean, it doesn't necessarily. All right, I'm going to put the music back on here. There we go. All right, guys. There you go. Music should be back on now. We're finally done doing what we were doing here. So Bitcoin 0 today. Yeah. I can't get mad at that comment. I really can't. Tesla or IBM? Tesla. I don't even know what IBM does. The problem now is that Tesla is so political right now, bro. Like, I see people arguing about Facebook and, like, attacking everybody. And, like, bro, like, look. It's a pendulum, guys. It's a pendulum, man. Like, my only issue is this. Is that the pendulum swings in politics, right? The pendulum swings. I don't even support either side. But the pendulum swings back and forth, right? And when one side has power, they're like, yeah, we got power. When the other side has power, if somebody disagrees with it, they're like, oh my gosh, the other side has power. It's like, yeah, dude, read history, you know? Like, it's a pendulum. It goes back and forth and back and forth. And honestly, the more far out one side gets, the more the pendulum swings in the other way when the next side gets power, right? And this is very consistent throughout history. It's not a shock, you know? And so people who don't like the current administration, again, I'm not saying I agree or disagree with them. I'm neutral. But they're acting like they're so surprised and shocked. It's just kind of like, all right, like, this is history. I'm not going to spend my life arguing with people about it. You know, you got to just move on. Confirmation of Jones versus Tom. Jones making 30 million. I'm okay with that. I just want to see them fight. What's your thoughts on PCE coming in? I think it's important, very, very relevant inflation data. Got the dip on Nvidia ETF. News effect on gold. I mean, gold is sometimes an inflation hedge, but gold also can move in a macro sense with markets. And so gold can go either way, to be honest. I'm not sure. Yeah. I did not say that, gifts. Can you please look at the Dow and see what you think on the Dow? I mean, The Dow's up big. It's testing lifetime highs. Lifetime highs at what? 45,227. So it literally broke lifetime highs earlier this morning on the Dow. If you're shorting it, it's a risky short. We're right around lifetime highs. We got really close to it here too. I think there's probably a pretty good chance that it goes up and breaks this lifetime high today. Although I have no freaking idea, and it might just dump down. No idea. Don't copy me. I'm not an investment professional. Yeah, but sometimes all-time highs are like magnets, is why I say this, right? So here's the all-time high. Sometimes this level can be like a freaking magnet. And so as we get close to it like this without breaking it, it gives more momentum to where we might break it and then dump down. Now, we might break it and then dump down like this and continue down, but I don't like shorting all-time highs. I don't think that makes sense. What's going to be the outcome of the dollar from today's news? I don't know. What's the Apple price going to be in 30 years, bro? Tell me that, and I'll tell you what the outcome of today's price is going to be. Yeah, Intel had earnings yesterday also. Did pretty good on Intel earnings, right? Another one that won yesterday was Visa. Visa gapping up to 350s today. Big gap up on good earnings for Visa. Inflation data is at 8:30. It might be in big yellow letters right underneath me, right here. Just a weatherman it. Like, you're welcome. You don't like to buy this high and don't like to short all-time highs, so you're just waiting. Yep. There's a very famous quote. What is it? Yeah, basically the DJTA has lost a lot of influence over time. The transportation Dow ETF, it's just for some traders it's useful, but for most investors it's not as much. They focus on the S&P, Nasdaq, and sector-specific ETFs instead. Somebody's asking me. No. Oh yeah. This is where AI can be really useful. I said, hey AI, what's the famous investing quote about waiting? None of those are it. List more. The stock market is a device for transferring money from the impatient to the patient. Okay, so Charlie Munger said, quote, this is the quote I was thinking of, is a Charlie Munger quote. He said, the big money is not in the buying and selling, but in the waiting. You know, absolutely true, 100% true. Without, absolutely true. Yeah, I don't have a crystal ball here, guys. Like, asking me what's going to happen at the end of the day today, bro. Like, nobody freaking knows this. Nobody. Like, nobody, guys. Like, genuinely, like, how am I supposed to know what the PCE inflation data is going to show? Not only that, but how the market responds to it and what the market ends at the rest of the day. It's a silly question to ask me, you know. Request your view on the poll. I'm not very accurate with PCE data. I'm accurate with CPI for whatever reason. I'm not really. But you're in the top 3 traders. You must know. That's true, I guess. But yeah, I really don't know. All right, so the poll, does core PCE come in higher or lower? 0.2%. I'm going to go 0.3%. But I might be wildly wrong. I'm going to go with 0.3% month to month. But again, I might be wildly wrong. I think it might come in a little bit higher than expected, and consequently, I don't know what the market's going to do because of it. The market might actually like that because it means greater, or no, actually no, the market's not going to like that, I don't think. All right, guys. I'm just going to say I started a freaking trend, dude, on YouTube, dude. Everybody loves economic data now. You're welcome, guys. Teaching the world economics. That's what I'm here for, man. Look at how long I've been doing this. I've been doing this for freaking years. Well before almost everybody does it. And half of them don't even know what they're talking about. You're welcome, guys. Inspiring the world to learn economics. One day at a time. Listen, 50% of the time I'm right every time, guys. All right, so UPS is reducing Amazon delivery volume. Yeah, so I think that came out yesterday. But interesting nonetheless. They basically said they had to. In something yesterday, they basically said they had to reduce the volume to save their business because they were entering a period of business in which their margins were tight. And yeah, something like that. Or it was either that or they said something like, we're not going to create our own demise or something. DeepSeek EPS's margin of revenue is ceiling. I did punch into DeepSeek EPS as margin and revenue as ceiling, and it gave me a 2-page thing agreeing with it. Yeah, because that's the freaking truth, bro. Listen, like, one thing you got to understand about YouTube is that people are just wanting to disagree with me. Why? Because I have a following and people pay attention to me. And so they just want to pretend that they know more than me or that somehow I'm wrong about everything. Like, this is confirmation bias in their own mind. Like, they're butthurt that I'm on YouTube. And so they're going to desperately try to pick apart anything I say. And they're going to be overcritical with it. That's the nature of this game, really, to be honest. But what I said is not like a super controversial thing. EPS is margins. It's the earnings per share. It's how much they're earning per share, i.e. the margins, right? Revenue as a ceiling is how much money they're bringing in, i.e. how much potential money they can make, or the ceiling of profit they can make is based around their revenue, right? Like, this is not a controversial, shocking statement. This, like, anybody that understands basic EPS and revenue is going to agree with what I just said. Again, in trading, though, the reality of it is the Dunning-Kruger effect is wildly out there in trading. Like, so many people study the market for like 2 months, 3 months. They don't really understand a lot of different stuff, but they are the loudest, most obnoxious people, criticizing other people's trades, attacking other people for everything else. And most of them have only been around for a very short period of time, and they think they know, but they just haven't been around long enough to really confirm that they know. And so they're just kind of wildly out here slinging stuff. The anonymity of the internet makes it even worse, and so that's what it is, right? But hey, it's all right, because you love to see proven right. Why did y'all both repeat the same comment? Yeah, and straight jacket. I don't want anybody to follow my trades, man. Especially not my trades. Like, I don't want people to listen to that. Even my investments. Like, make up your own mind. I have no idea what I'm talking about. I do understand economics, though. Like that's what it really is. Like, I understand economics, and I understand earnings to a certain extent, because I have to cover it for business, you know. And a lot of people would argue that EPS and revenue aren't the most important metrics for earnings anyway, and I might agree. I think guidance, future projections is the most important. Yeah, I got a thumbnail guy, straight jacket. So yeah, I just got a thumbnail guy. He made those. He made the new ones. I mean, I gave him guidance. I was like, hey, make my head bigger. Make me look like a cartoon. Super, like, self-deprecating. I'm like, you know, I try to be self-deprecating because it's funny. And so that's what I told him. Make myself big and silly looking. And, you know, it'll probably pop more. And I think it works. Right, I try to explain it in a simplified way for everybody at home to understand it. That's why I say EPS is margins, because that's what it is, and revenue is the ceiling of profit they can make. Like, how much revenue they bring in dictates how much profit they bring in, right? Their margins. And so it's, pretty obvious. But like I said, man, anytime you're on YouTube, people just want to disagree to disagree. Yeah. Honestly, like I said, the biggest haters are really people that have tried to be YouTubers and they're either struggling at it currently or failed, right? Like those guys are the biggest, most butthurt haters in the world, dude. You would never imagine that how like weird they get. But yeah. Like my wife and I were watching this documentary yesterday. It's about this kid who was like an orphan, and like he was like this huge scammer. Like he would change his personalities. Like he pretended to be a British guy and changed his name to like some super English sounding name, and like would scam people and do all these different scams. And like if somebody like stood up to him and were like, no, I'm not going to pay you anymore or whatever, he would go on like Scorned Earth, like crazy smear campaign about them. That's what it feels like sometimes. Have you already some resistance level top set prices for Q today, or do you wait until open? I'm gonna draw them on the NQ once I start to trade. I'll draw them. I'm gonna let the market dictate some of those. How is crypto pumping right now? It's not pumping. Yeah, I mean, Bitcoin up to 105 is still green on the day. Bitcoin is still kind of like up a little bit on Powell's comments regarding crypto. Powell was definitely more welcoming towards crypto during the Fed meeting, the Fed press conference, and so that's probably why Bitcoin is still up. Hey, thank you, Joseph. What are your thoughts on UPS or Intel? Good value? I don't know, man. It might be. I look at PE ratio, look at long-term trend. Like good value doesn't always mean good value. One of the reasons PE ratio is good because it shows you like the earnings. Like you might see a company that's down big, right? And you might say, oh, well, there's some value here. Let me buy it up. But if that company's turning obsolete, it's not cheap. It's just bad. If that makes sense, right? And PE ratio will kind of give you a little bit more insight into like whether you should be interested in that stock or not. Why? Because it shows you how much the stock is currently earning versus the share price, right? But this is a little bit flawed because it can be lagging as well. Like in technology, we have these game-changing events and sequences that render a lot of other tech companies obsolete, or a lot of companies in general get rendered obsolete in this way. And so even though a company might have had good earnings over the last 12 months, if a new game-changing technology comes out that renders it obsolete, it doesn't matter. That still might be a pretty bad, like low value buy. And so you got to take that context into it. The thought experiment I always use when I buy up something is, what's this company going to look like in 5 years, 10 years? Okay, if it looks good in 5 or 10 years and we're just on a downtrend and there's not really any threatening companies that or technologies that might render it obsolete, then I'm a little bit more interested in buying it. But if it's something like a good example is Dish, right? Like we were talking about Dish for years prior to it getting delisted and going bankrupt. Why were we talking about Dish for years? Because satellite dishes for TV purposes are obviously obsolete, right? Streaming has taken over. The technology's improved. Satellite dishes are big, clunky. You got to pay for somebody to strap them to your house. Even then, the service isn't perfect. Internet has gotten so good that streaming has taken over completely and rendered satellite dish obsolete. And if you recognize stuff like that, you might be able to get into some shorts, really. I'm not a big shorter, but that's the type of stuff I want to short. And we talked about this for years, and then eventually Dish just got completely booted out of the NASDAQ and S&P and delisted and went bankrupt, I think. And it was predictable, right? Like we talked about this for years, and as we talked about it, just kind of kept dropping and dropping and dropping. And so there's some companies that you can find an edge shorting in that way. You just got to be smart and analytical with it. You got to say, hey, like, what's this company look like in 5 to 10 years? If it looks good, and do some research. AI is useful for that. If it looks bad, obviously be careful. What's up, Andrew? Cat Williams. All right, guys. So yeah, Bitcoin's still up to 105s. We got the Dow here. We got the Nasdaq still up to 520s here. So again, here's a good question for you guys that we talked about earlier. So if a crash statistically happens once every 10, on average, once every 10 years, when was the last time that you considered the market crashed? Right? I consider it crashed in 2020. We dropped 35% on the SPY, and the S&P dropped 35% in 2020. Pretty significantly. Do you consider that a crash? We also corrected only a year or two later, or no, yeah, we also corrected a year or two later at about 26% with a longer term bear market. And so, when was the last time you think the market crashed? Give me the date, the year. 07 and 08? Well, what do you think was different between 07 and 08 versus 2020, Jamal? 07 and 08 was certainly more of a recession, that influenced finance and everything else. But percentage-wise, 35% after 2020. And we rebounded really quickly, but it doesn't matter. Like 87, one of the most famous market crashes in history, 1987, we dropped and then we bounced back. I guess a lot of people might not consider 2020 a crash because we dropped and then very, very quickly rebounded back up. But it depends. It's subjective. Yeah, so it's expected to show up at 0.2% month over month. We got like 40 minutes, 35 minutes left. Right, a crash is down and up. A crash isn't necessarily down and up. It's just a steep, like an example of it. Again, I can show you the charting here. All right, let's take a look. So here's the NASDAQ 100 here. Let me see how far this goes back. Does this go back to 2000? Yes, it does. Okay, so here's 2020. Or no, this is 2021. 2020. I mean, on the NASDAQ, I guess we didn't drop that. Oh yeah, here's 2020 right here. So here's 2020. Well, the NASDAQ, we dropped from 240s down to 170s. It very quickly in 5 weeks, in a month, a little bit over a month, we dropped huge percentages. But the thing about 2020 is that we bounced back pretty quick. Like within like 2 months later, we were back up, breaking highs again and doing things. Now, again, you can take that context into it. This is a crash, right? This is a crash. A correction is a little bit longer term bear market like this, right? So this is a correction. So crash, correction difference. Corrections are much slower, much longer term, and they can last for a longer term. This was, I know in the S&P, this was like 26% versus 35%. But again, that's the difference. Correction is a much longer term one. Maybe less steep, but longer term. A crash is just a huge dump very quickly. And now all of this compared to the dot-com crash, which was really long term. Not only did we have drastic steep drops very, very quickly here, boom, like massive drops, boom, massive drops, but we also had for years a bear market. This is one of the only times in history in which we've bear trended longer than a year, right? Statistically, it's super improbable that we downward trend for longer than a year. This is one of the main times in history in which we did. And it also took us a long time. People also look at this one with a little bit more strict view, because if you genuinely take a look at how long we downtrended, we were downtrending for a long time, and then 2008 happened. But again, in this context, 2008 looks kind of wimpy, right? Like people are talking about 2008. I mean, again, we had a steep crash and then a continuation. This is a crash. But with that said, 2008, we rebounded pretty quick back up there too. Like, look. But it certainly wasn't a couple months like 2020. So it just depends on whether you consider 2020 a crash. And this is why I tell people, like, look, if you consider 2020 a crash, the last crash was 5 years ago. If you consider 2008 the last crash was 17 years ago. And so depending on which one you consider a crash dictates how long it's been since we've done that. And yeah. Next week is big too. Next week we have the JOLTS report. We've got payrolls and unemployment data, which is massive. We have ISM manufacturing PMI data. We've got non-farm employment. A bunch of stuff next week. All right, guys, we got over 700 people here. Still got over 30 minutes left before PCE inflation drops. Hey, what's up, Tiny? Good morning, good morning. Welcome. It's Friday. I'd call 20 a flash crash. Yeah, that makes sense. Remember, core PCE is the big one today. Regular PCs, all but insignificant. Uh, 8:30 Eastern Standard Time. Yeah, most people don't think most people over predict crashes, in all honesty. Like, they just simply over predict it. "2020 should have an asterisk next to it because it was a global shutdown not caused by an underlying financial problem." Yeah, maybe. So I passed my blue belt exam, but they had to order the belt, so I gotta wait to get it. But I passed it. I'm gonna be one. Hey, thank you. Yeah, appreciate it. Kind of nervous about it. I don't get the privilege of being a white belt anymore. What I mean by that is, like, if higher belts roll with a white belt, they usually go somewhat gentle, depending on who it is. If they spar with a blue belt, that gentleness is gone. Like, they're not gonna be easy on you anymore. So I'm a little nervous, but big foe. Hey, what's up, Francisco? Good morning, man. What's up, Aaron? Imagine a PCE comes in at plus 0.3% or at 0.3% plus. Yeah, I think it's going to come in at 0.3, but I might be wrong. I'm just guessing. This is just straight up guess. Yeah, I love, like, again, I'm waiting for a correction so I can start buying stuff up. I'm going to dollar cost average the crap out of the market if it has some big correction or pullback. Hey, thank you. Just to put this into perspective, right? A blue belt in jiu-jitsu is different than every other martial art. You can have a blue belt in karate, it doesn't really mean much. You can have a black belt in karate in 2 years, to be honest, at a lot of gyms. So it doesn't really mean anything. Jiu-jitsu, you actually get full resistance every day when you train. So when you roll with somebody or spar with somebody, you're full sparring every day in jiu-jitsu. It's different. It's different than every other martial art. Except for maybe boxing when you do sparring. But point is, if you get a blue belt in jiu-jitsu, that takes years, and you're better than 95% of everybody else, which is good. Feels good. Yeah, I've seen the jiu-jitsu fights. 0.3% would probably be bearish. It would mean higher inflation than expected at 0.2%. So I think it's going to be slightly higher, but I'm not sure exactly. Like, it's really tricky to see. I'm not sure. I'm going to go with 0.3% higher, but I also think that it's also possible we come in neutral or we come in lower. I really don't know. I'm just kind of guessing here. Are there fights this weekend? I don't even know, man. I didn't even look. Let me see. I think there's fights February 1st tomorrow. There is fights, right? It's a good card, too. Oh, yeah. Tomorrow at 11 a.m., bro. We got... Oh, no. Tomorrow at 11, we got Izzy versus Imavov. We got the Bullet versus Michael Venom Page. That'll be fun. Sergey Pavlich versus Rosenstruck. Saeed Nurmagomedov versus Oliveira. That's honestly a pretty good free card tomorrow. Jerome Powell, he did sound dovish. I don't know if he sounded dovish. He sounded optimistic, which I don't necessarily think is dovish, right? A dovish Powell is actually kind of worried about a weak economy, right? So a dovish Powell is going to be like, hey, like we might start cutting rates, we might start bringing interest rates down, the labor market's too strong, inflation is high, like we're worried, we got to start bringing rates down. That's a dovish Fed, right? A hawkish Fed is like, hey, things look good in the economy, things are strong. Or wait, did I just get that backwards? I think I might have. A dovish Fed wants to bring interest rates down. Yeah, which means that the economy is weak, right? Okay, I got it right. A hawkish Fed is somebody that is worried about inflation. The only thing I got wrong was the inflation part. A hawkish Fed is somebody that's worried about inflation, right? Inflation's too elevated. The economy's too strong. Yeah. Yeah, I was right. Sorry. Yeah, Venom Page. People hate on Venom Page. I'm not sure why. That dude's got one of the most fun fighting styles to watch. Like, I used to watch him way back when he was in Bellator. That dude is a beast, man. Like, some of his KOs, he does the Pokemon, taunt after he knocks people out. Dude, is crazy. One of the most, like, look up Michael Venom Page knockouts. This dude's got a karate stance, dances around, and just KOs people. One of the most fun fighters to watch, for sure. I don't know if we're going to have low PCE. We'll see. Low PCE should equal a green day. Yeah, the lower PCE we come in, we think this. Yesterday we had GDP come out, and GDP was lower than expected, and the market kind of went up from it. And so I don't know, man. I think the market wants rate cuts, and so anything that signals rate cuts, the market's going to be happy with, and that might be low. I guess to cut rates, we'd have to lower inflation. So yeah, that's probably true. So yeah, I think the market wants lower inflation, obviously. Higher is going to make the market panic. Probably. .3% is bearish because the Fed won't want to cut rates with rising inflation. Yeah, maybe. High rates makes financing harder for business. Yeah, for sure. I mean, it makes less money floating around out there because interest rates are higher. Like, the logic of it, guys, we've talked about this before, but the logic's very easy to understand. Like, it seems a little intimidating. Even the movie The Big Short has, like, the quote about how bankers use big words so people just leave them alone. Very true. There's a lot of jargon. The easiest way to put it is, like, the Federal Reserve controls interest rates. They influence other regional banks. So when you hear, like, this is a Fed member and this is a Fed member, these are the heads of all the other regional banks. And then Jerome Powell's the head of the Federal Reserve, like the big bank, that influences all the other banks. Now, what they do is they control interest rates and they influence economic policy in terms of, like, economic spending through stuff like quantitative easing or quantitative tightening, stuff like that. And so Powell and the rest of the Fed really influences interest rates. If the economy is weak and we're seeing, like, low unemployment, low GDP data, high inflation, low GDP data, low inflation, weak economics, then the Federal Reserve will either lower interest rates or they'll do something called quantitative easing, which is just money printing where they inject liquidity into the economy. through buying up bonds. They create bank reserves and then buy up assets with it, and that injects liquidity into markets. And this is a little bit more desperate measure because it also can make inflation worse, right? So they have to be really selective on when they choose to do QE. It's not something that they can just constantly do all the time to keep a low interest rate environment. They have to be selective with it because it's a more desperate measure. If we genuinely see economic weakness and we're heading towards like a recession and depression, they're more likely to do it. They did it in 2020. They did it in 2008. And so they'll do QE if they need to, if the economy looks weak enough. But that's the point, is that the Federal Reserve in that regard will do economic stimulus through lowering the federal funds rate, which is short-term interest rates. But eventually that trickles into everything else, like auto loans, and all the other long-term rates can be indirectly affected by it as well. And so point is, economy weak, Fed wants to lower rates to stimulate it or inject liquidity through quantitative easing, money printing. They did both of those things in 2020, and the consequence was inflation. They also sent out stimulus checks, which made it worse, which again, the consequence was inflation. Inflation spiked up to over 10%, or almost 10% following 2020, unlike 21 and 22. And so then they had to play the other side of it, where they start to be what's called hawkish or restrictive. You know, one's loose, dovish is loose, low interest rates are loose, money printing is loose policy by the Federal Reserve. Restrictive policy is hawkish. It's when they raise interest rates through rate hikes. They will raise the federal funds rate. So that, and the logic of it is that when interest rates go up, people have less access to money. You know, they don't want to get as many loans because interest rates are high. They have less free money floating around, and so they tend to spend less, and spending less restricts the economy and ultimately causes inflation to drop in theory. They can also do quantitative tightening, which is kind of the opposite of QE, which is basically just letting their balance sheet run off, like taking away liquidity from markets, and ultimately its passive QT is letting their balance sheet run off. Direct QT would be just selling bonds, basically. But it takes liquidity away from markets and ultimately, keeps a hawkish mindset, restrictive mindset with everything. And that's basically what the Federal Reserve does. And so when you hear rate hikes or rate cuts or rate decisions or Federal Reserve press conference or Jerome Powell, this is what all this stuff means. This is why it's all relevant and influences the economy, which in turn influences the rest of finance. And so, yeah. GDP came in weak. Yeah, I mean, but the thing about it, though, is that GDP was first initial estimate GDP. Again, there's three different phases. It happens every quarter, which is once every 3 months you get, but GDP releases monthly, right? And so you get a different revision of the same GDP every month, right? First month is the initial estimate. It's the least accurate, more variance heavy one. The second one is the first revision. It's kind of a middle road where they revise it once with a little bit more accurate information, and then the third is the final estimate, or the second revision, which is like the most accurate GDP that they have, right? And so, point is, yesterday was the initial estimate. It's the most variance filled, right? And it came in, I think, at 2.3%. 2.3%. So it did show up a little bit lower than 2.5 to 3% they expected, but it's still not bad in terms of historical averages for GDP. It wasn't terrible, 0.3 will go. Yeah, if we, I don't think we're, again, I don't know, man. I don't know. Like, I'm saying 0.3, I'm just throwing a number out there. I'm not super accurate with PCE. Like, CPI, I've gotten, like, it's honestly crazy how accurate I've been with CPI. CPI, I've gotten like genuinely like 7 or 8 out of the last 10 exactly right in my predictions, exactly right, which is very strange, very strange. I don't know how I was able to do it, and honestly, I'm just kind of guessing. I'm not really, Cheers to you guys. What's the bigger impact? PCE. Personal Consumption Expenditure Index is the big one. Core PCE is the one everybody looks at. So personal spending is interesting and relevant to a certain extent, but PCE is big, has tons of people paying attention to it. We'll have thousands of people here when it drops. PCE is important. It's inflation. It's the Fed's preferred inflation metric. It's what they look at to gauge inflation. And again, if inflation is elevated, then the Federal Reserve is going to be a lot more hawkish and restrictive and try to push the economy down through rising interest rates or whatever. If inflation comes in low and reasonable, the Federal Reserve is going to be a lot more willing to lower interest rates or cut rates more aggressively than originally anticipated. And again, this is what the Fed looks at. Retail watches CPI a lot, and we cover CPI. And CPI is probably a bigger stream versus today's PCE, but PCE is the more accurate one according to the Federal Reserve, at least core PCE, which excludes food and energy prices. Because food and energy prices are some of the most volatile. So like that's what it is, if all that makes sense. All right, guys, we got 15-20 minutes. Yeah, all good. Party music. No worries, man. Yeah, this is what I'm here for. Like people try to criticize my day trading, but I'm really an economist. You know, my day trading might suck. Who cares, right? I'm really an economist. Like I like gauging the economics of everything. You know, that's what I'm really genuinely interested in, and that's what I looked at to influence my investments and everything else. Is what the economy's doing. All right, Chad, hit the subscribe button, hit the notification bell. We still got like almost 20 minutes left before PCE inflation. We got about 1,000 viewers here. Hopefully you guys make some money today with me. We'll see what happens. We got a video debuting after the stream talking about how we build levels in markets, and so be ready for that video. Yesterday we had Visa, Apple earnings. Apple went up big on their earnings report though, so Apple they killed it with their earnings. Apple just did great. All right. All right. Yeah, here's the Dow. Nasdaq's riding pretty high though. Hey, what's up, Eli? All right, guys, 15 minutes. All right. Yeah, we got a poll going in our Discord too. What's bigger, PCE or Apple? I would say Apple probably. Apple's the most heavily weighted stock in the stock market, so I would say Apple. But you know, you could argue either one of them is more important. Depends on what. Apple's definitely more relevant for the stock market. For economics, you could argue PCE is, but it varies. It depends. Again, y'all hit that subscribe button today, though, guys. We are pushing towards 155,000 subs. Apple is pushing the market. If PCE comes in high, market might dip. Any technique or psychological trick on how to be strong and accept the loss before it's too late? You just want to be like Pavlov and the dogs. Like Pavlov, the famous psychological experiment by Pavlov, and you learn this in like Psychology 101, or any psych classes should teach you about Pavlov. So Pavlov is a guy who was a scientist, and he started doing tests on conditioning animals. And so what he would do, is he would feed the dog. He would ring a bell, and every time he would ring a bell, he had two dogs. He would feed the dogs every time he rang the bell. So he'd ring a bell, feed the dogs, ring the bell, feed the dogs, ring the bell, feed the dogs. And he did it over and over again to a point where he eventually removed the stimulus of the food altogether and just rang the bell and studied what would happen. And what would happen is that the dog would drool, it would salivate every time the bell would ring, regardless of whether the food was there or not, after a certain point of conditioning. And so the conclusion he came to was that you can condition different things, and this is called classical conditioning, right? And so when I say be like Pavlov and the dogs, what I mean by that is, like, in trading, if you want to get better at something that you're struggling with, exposure, like, do it over and over and over and over and over again with small size or with a Dibble account is what I would say. But again, I'm not an investment professional. Don't copy me. I have no idea what I'm doing. But do it over and over and over again until it becomes second nature, right? That's how you get good at cutting losses. That's how you get good at taking trades. That's how you get good at everything. It's just exposure, doing it over and over and over and over and over and over and over again until it becomes so second nature you don't have to worry, struggle, think about it. You know, that's what it is. Yeah, when they were making fun of Pavlov on The Office, I think it was when every time Jim gave Dwight an Altoid, every time Jim made a buzz on his phone, he gave Dwight an Altoid or something, made a ringing sound, he gave Dwight an Altoid, and eventually he rang the bell without an Altoid, and Dwight had his hand out expecting one and was confused and said his mouth felt weird and dry. So. Yeah, maybe he rang a bell. I don't know. I can't remember what it is. I remember the episode, though. Anybody know why ETH's breaking out? No, I'm not sure. Try, get better over time. Yeah, I mean, this is second nature. You try, you get better. You try it again. You keep doing it. You know, you just keep trying and trying and trying. That's how you get it. That's how you get better. I like that. I like Pavlov as a name. You can call it Pav. It's a good dog name. My wife and my whole family was sitting here trying to come up with, I think the quote we say it is, Diddy diddles Demetrius daringly. How many times did he diddle? I think is the saying we came up with last night. Cheers to that saying. All right, Visa at 350s, the Q at 527s. Yeah, it's all classical conditioning. If you've ever trained a dog, that's what you do with training dogs, right? Like, I have 2 German Shepherds, great dogs, honestly, great dogs, very conditioned. Like, you can condition them super easy, super quick learners, very fast. One of ours, we're pretty sure, has like a working line in him, and this one, super food motivated, hyper food motivated, will literally drool if we get the food out. So he's conditioned to drool when the food comes out already. The other one is very sweet, very gentle, much less food motivated, much more affection motivated. And so, inflation is bigger than Apple. Well, I mean, maybe. It's subjective. Rosie and Bruce are their names. Rosie and Bruce. Rosie's my favorite. I hate to have a favorite, but she's just the sweetest, best dog ever. Bruce is cool. Alright, so we're going to have to create some levels here. I think we got a little bit too much right here. We're going to have to start clearing some out and redoing these, I think. So let's do it. Here, wait, isn't there a way to completely take away all these levels? I think there is, right? Somebody help me out here. I know there's a way. Oh, remove drawings. Yep. All right, cool. All right, so let's document some levels here, chat. And I'll also kind of give you guys a quick little preview of how I specifically do it. I look for at least, I look for multiple confirmations, at least 3. 1, 2, 3, 4. That's 1. 632. Zoom in a little bit. We'll put Another one here. Zoom in a little bit. And we're looking at a 5-minute chart now. We got another one here. Zoom in a little bit. Short term, we got like there. We got this double top here. Obviously, got to watch this. I like that. Okay, that's good. And then we'll switch to a 1 minute afterwards. All right. Gotta look at longer term levels too, though. So let's go back. All right, guys, we got 7 minutes before PCE inflation data. 7 minutes. Seven minutes, chat. All right. There we go. All right, 7 minutes. The only thing I need a level higher too, but it's all right. We got some up there. Again, PC inflation data, very relevant day. Very relevant day. Actually, I'm gonna put this at 50. All right, guys. We got some levels. Here's the 200 exponential down there. 7 minutes, 6.5 minutes left. Chat, 6.5. And thank you, Toby. What's up, Freddie? Yeah, sorry, I'm just not gonna promote any other or post any other people. Sorry, dude. Always tuning in for the data releases. Yeah, we're here, guys. We got 5 minutes plus. Be ready. Yeah, we got about five minutes left. 1,500 viewers right now. I appreciate the love. Thanks so much, guys. It's been a very busy week for me, man. And I genuinely appreciate all the love we got today and yesterday. Oh, that's right. Are you guys red or green this week? Chat, red or green this week? Leg day. I actually work out my legs a lot. I just have bad calf muscles. You know? Like, I really do. Like, I work out my legs a ton. I just got bad calves. Calves are genetic, dude. I can't do nothing about it. You know? Top 3 smallest calves ever in the world right now, for sure. Definitely the top 3 smallest calves ever. All right, chat. You guys ready? Again, we got less than 4 minutes left. 3.5 minutes here, chat. 3.5. Let's do this. Three and a half minutes. Again, give me your predictions in chat. Higher or lower? I'm going to go with slightly higher, but I have no freaking idea. I'm going to go with slightly higher. Again, I genuinely have no idea. Slightly higher. We'll see. Red, high, even, higher, 0.1%. Come on, maybe 0.1%. That's possible. 6.1. Is high a good sign for the market? No, higher is higher inflation is bad. Although it can indicate like strength in the economy. Do you listen to rap music? Sometimes. I listen to a little bit of everything. All right, guys, 2 minutes. 2 minutes. Noodle legs, yeah, definitely, for sure. Top 3 biggest noodle legs in the world right now. Yeah. All right, guys. Here we go. Still got we still got 2 minutes left, give or take. Yeah, we have a Discord. I'll cover it all later. Again, PCE inflation data. The biggest, arguably the biggest economic release of this week goes live in less than 2 minutes, guys. Less than 2 minutes. If I had a drum roll, I'd do it. It's a massively important release today. Higher inflation, higher PCE inflation is obviously not good for the current state of the economy. If we get higher inflation, it means that the market is not going to get rate cuts that it so desperately wants. It's less likely that we'll get rate cuts. And so again, high inflation, high PCE is bad. Core PCE is the big one and excludes food and energy prices. We got about a minute left, chat. About 1 minute left. 1 minute left, chat. Be ready. It's time. Massively important release, chat. Massively important. I think we got consumer sentiment data. Remember, core PC is the most important. It's expected at 0.2%. Guys, 0.2% here. Hit the live button next to the play button. Make sure you're fully caught up on stream, chat. Be ready. We got about 40 seconds left. 40 seconds. We got well over 2,000 people here. Thank you so much for joining us today, guys. PC inflation in 30 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream. Here's the NASDAQ. We got the Q up. I'm going to put gold up on the top chart. We could put maybe like, yeah. Just going to minimize this one down here. Here's the Q. Or here, we'll put the SPY up in the Q. All right, guys, here we go. 10 seconds. Early, about 14 seconds. 13, 12, 11, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, and here's the release. All right, employment benefits and employment cost index came in at 0%. PCE came in at 0.2% as expected. Core PCE year over year showed up at 2.8% as expected. PCE came in as expected as well. Everything showed up as expected today. As expected, PCE completely flat. Didn't move the market at all because it came in neutral here, guys. So again, PCE data came in as expected today. 0.2% on the month for core, 2.8% on the year for core. As expected, flat, 0.2%. Market's actually going down a little bit, but again, we came in flat as expected, 0.2%. Not the end of the world. You know, also the Fed Bowman is speaking right now, but again, we came in flat, 0.2%, 2.8% on the year, as expected. We'll put this data up on screen, but again, we came in flat, guys, as expected, 0.2%. Not a crazy, you know, discrepancy here between expected and outcome values. 2.6% on the year. Core PCE showed up at 2.8% on the year. So again, basically flat. Put both of these up on screen so you can see both of them here. All right, here's both numbers right here below me. Flat. Market's basically neutral. Hasn't done anything. So it flat, neutral, as expected today, guys. Flat, neutral, as expected. What do you guys think of this? Does this mean bullish? It means neutral, and the market's reacting in a neutral way. It hasn't really moved at all, to be honest. So it just means neutral. It means no movement here, just neutral. Yeah, it's a tiny move for data here. Tiny move. Well, it's not that it won't affect the market. It just came in as expected, and really most of it showed up slightly higher than last time. Like last time, PCE core month over month came in at 0.1%. Today it came in at 0.2%, slightly higher for inflation, but they expected 0.2%, so it's neutral in that regard. Core PCE year over year, last time it showed up at 2.8%. This time it showed up at 2.8%. They expected it to show up at 2.8%, so it's just basically neutral release. Just nothing really happened because it came in pretty flat, neutral, didn't really shock anything. Nobody got panicked. Stick around though, guys. We are going to trade the opening bell. Remember, guys, listen. Remember, almost all day traders lose money. If you fund your own account thousands and thousands of dollars in day trading, you're probably going to lose it. Let's just be honest here for a second. It makes absolutely no sense to fund your own account. Almost all day traders lose. It's like 90 to 95%. Funding your own account 5, 10, 20, 30 grand is a dumb idea in the beginning. You're probably going to lose it. Instead, try a funded account program. I'm an affiliate of them. I'm biased. They pay me money. Check everything with them, confirm everything with them. I can't guarantee anything, but Top Step gives you a demo and they test your skill with it. If you pass the test, they fund you with a 90% split between 50K up to 150K with a 90% split. If you buy the base one, it's only $49 a month. So your risk is limited. If you pass the test, you get 50K in funding, 90% split. They've paid out almost $200 million since 2020. They fund thousands of traders. They've been around for over 12 years. They're the most legit one in the world, and they have zero commissions. And so you can make tiny little trades and still net most of the profit because of zero commission on Top Step X specifically. You have to use Top Step X to get zero commission. And so it's the best of both worlds. It limits your risk. It teaches you how to trade. Comes with real-time data. If you were going to pay for a demo account with real-time data, it's going to cost about the same. And even if you fail the challenge, you still get a practice account with real-time data. So the value is there. But if you pass it, tons of rewards. It's kind of like a souped-up demo account. And again, in the futures market, you can day trade the S&P, the NASDAQ, the Dow, the Russell, gold. Patterns are very, very similar to blue chip stock patterns. And most day traders trade futures, to be honest. If you want to check it out, though, again, they're an affiliate of mine. I have no freaking idea what I'm talking about. You want to confirm everything with them first. Here's the link if you want to check it out. I'll put it up in chat right now. There's the link. Remember, I have no idea what I'm talking about. Understand CFTC 4.41. I don't guarantee anything in terms of day trading. I'm terrible at day trading. Do not copy me. I'm not an investment professional. All right. Why they keep cooking the numbers? Okay, so if they come in higher than expected, people say they cook the numbers. If they come in lower than expected, they say they cook the numbers. If they come in as expected, they say they cook the numbers. I think people that make... This is what I think. Anybody that I see saying this, it usually goes like this. They make some big, bold prediction of a market crash. A market crash doesn't happen. And so they scream and cry manipulation. And I've said it before, I'll say it again. Nobody cries manipulation more than somebody that's wrong about a prediction in the finance industry. You know? Absolutely true. Absolutely true. Yeah, I have no idea what's going to happen here either. Yeah, I mean, I'm not going to get up the sources of how I get the PCE data so quickly. I got a bunch of different sources, to be honest. But yeah. Sorry, guys. Apple's at 41 PE. Yeah, Apple PE ratio is kind of high for Apple. According to historical standards, right? That's something I can't agree with. Apple, historically, their PE ratio is about 21, I think, over a 10-year period, right? They're up to 40 now, PE ratio. So, yeah, I would agree Apple's a little bit overvalued right now. I agree. But again, I don't freaking know. Who knows? Yeah, this is the smallest reaction I've ever seen from a PCE inflation report. It really is tiny. It's a tiny, tiny reaction, believe it or not. Yeah, I'm not using Bloomberg Terminal, to be honest. That's like 30 grand a year or something. I mean, you can see how fast I get the data anyway, right? I don't need Bloomberg Terminal. I'm late. Can you state it again? PCE came in at 0.2% as expected on the month for core PCE. Year over year showed up at 2.8% versus 2.8% and 2.8% last time. So flat, basically. John, is insider info illegal? It depends on the context of it. I'm certainly not getting insider info. It's not like I've got some type of secret source that's feeding me information. Like, all the sources I'm using are publicly available. Are y'all buying or selling right now, chat? Let me end this poll here, guys. So I'm gonna end this poll. Hey, I love you. Have a good day. Yeah, so I'm gonna end this poll, guys. We came in pretty much neutral. Are you bullish or bearish? We have more economic data coming out today as well. Are you bullish or bearish for the rest of the day? Bull, bear. Let me know how you feel. There's the poll. Are you bullish or bearish for today, guys? Let me know. I am watching. Real money's not made in buying or selling, guys. It's in waiting. Bullish then bearish. I think we get down to 21.7 then bounce. Maybe. Oh, well, yeah. If you have secret information on the revenue of a company and you use that to... Yeah, I'm pretty sure that's not allowed. Patience is a virtue. Yep. That it is. That it is. All right, chat. Y'all ready? Whew. All right. So inflation data came out. We have one of the most underwhelming reactions I've ever seen inflation data give us here, chat. But that's not all. But that's not all, guys. No. We got today. We also have Chicago PMI coming out. Yeah, we also have Chicago PMI coming out. We got Dallas Fed PCE coming out too. I thought we had Michigan consumer sentiment, but that must be next week. But yeah, we got Chicago PMI coming out at 9:45. Watch for that too. Institutions may be buying. Why did DeepSeek affect Nvidia so much? DeepSeek affected Nvidia for a few different reasons. The main reason is because they came out with an AI system according to them, right? This is all, like, according to them at least, allegedly. They came out with an AI system that used, like, over 70 to 80% less chips, less powerful chips, with basically the same accuracy and usefulness as the previous ones that use so much more chips, right? So it's essentially, they came out with an AI system that was much less chip intensive, which is bad for Nvidia. If Nvidia is producing the most powerful chips in the world and spending all this money on powerful chips, then you can theorize that an AI system that doesn't need all of those chips in the same way, or at least to the same extent, might make Nvidia go down. And that's exactly what happened. Nvidia dropped on pessimism because of that specific thing. That's what the DeepSeek AI news was they came out with their AI system that, according to them, was much less chip intensive. And in regards to Nvidia, yeah, it made Nvidia drop because of it, because Nvidia produces chips. Bowman's speaking, I think, right now. I wouldn't time travel at all because I've got a family and I love them, and I wouldn't, But just to pretend, I would go back to 92 because that's the earliest, because you're going to have the most information on history back in 1992 in terms of technological advancements, stocks, everything. You're going to have the biggest edge going back the farthest. Yeah, but they're overseas. 8 tracks, it doesn't matter. They're overseas. Yeah, they might have embellished it, exaggerated it. That's certainly possible. A lot of people say it's a retaliatory measure because of the TT ban, but who knows?
Yeah, it was either the tariff news or the TT ban that made them retaliate. Most likely. No, I mean, we can only speculate, but most likely. Market, again, guys, hasn't really moved. Again, stick around. We're going to trade live at the opening bell today, guys. We are going to trade live. Stick around. We're going to cover it all right here. We got Chicago PMI coming out later as well. We're going to stream that too. All right, so the president is going to meet with Nvidia CEO Jensen Huang at the White House in some news that just dropped. Again, the president is going to meet with Jensen Huang, Nvidia CEO. Speaking of Nvidia, can you explain what these numbers mean for markets? So the personal consumption expenditure is the Fed's preferred inflation metric. It's what they look at to gauge inflation. And so in that context, the Fed's going to look at PCE inflation to see how high prices are and to determine what their economic policies are going to be, what their decisions are going to be in terms of interest rates. If inflation is out of control, the Fed's more likely to raise rates and restrict the economy to push spending down and control inflation. If inflation is low and the economy is weak, the Fed's more likely to lower interest rates and stimulate the economy to try to increase spending and save us from the recession or depression that could potentially come from that. Right now, we're in a period where inflation's the bigger worry, I think. But I also think the market wants rate cuts. And so, we had a flat reading basically today. Basically a neutral reading. It was as expected. It was basically in line with last time, too, for most of them. And so it was a neutral flat reading. And so that's why the market hasn't really responded much, because it didn't really say inflation was up. It didn't really say inflation was down. Now, in the context of, inflation is always going up. And this showed inflation goes up. Like literally goes up, but in terms of like the speed at which it's going up or down, we were basically flat in terms of expected numbers. So the market didn't really react much to the PCE today. They stood on the shoulders of existing data. Yeah, but okay. That's how every technological advancement is made. Every tech advancement is because they stood on shoulders of the giants before them, right? Like every computer that's produced now used information that they got from the people who built computers 20 years ago, 30 years ago. Like that's life. That's technology. That's how it goes. I don't think we should use that to discredit it at all. And I think it's a legitimate worry or fear. I think people are just so propped up in microchips that they're fearing it. And so confirmation bias is like, oh, it's not a big deal. It's not a big deal. And honestly, I don't know if it is or not. Time will tell. Time will tell. I know Nvidia is still pretty high PE. It's not crazy high like people act like. It's like 40 or no, it's like 50 something, which is high. But in terms of historical standards for Nvidia, it's not the craziest. Okay, yeah, I mean, maybe that's what you mean by a tie. In that context, you might be right. If they're only using ChatGPT's data and they can't do it without ChatGPT, then it's meaningless. I'll have to look more deeply into it. Yeah, I mean, we have members. If you want to become a member, just hit the join button. You don't get anything extra. I told people I wouldn't have any paywalls behind content, including memberships, but you get these great emojis. Beardless John. It's right here for you. Again, so the president's going to meet with Nvidia CEO. Well, the stock split's insignificant, though, him. What do you think a stock split is? Like a stock split, the structure of the stocks are the same. A split just means that they split it into multiple pieces and compensate the difference so that it becomes more affordable for investors. I think Netflix, as an example, I think Netflix is going to split sometime in the next year because it's getting around $1,000 a share. And that's unaffordable for a lot of people. And they want people to be able to afford their shares so they get more interest in buying shares for whatever company. And so, yeah, the structure of which Nvidia held, like the market cap of Nvidia stayed the same after the split, aside from like swings up and down from the announcement. But the market cap stayed the same. and for the most part, approximately the same. No, you can't pay me money to mentor you. I don't accept money for anything here. And really, I have no idea what I'm talking about. I don't know what I'd mentor you on. Yeah, I think if DeepSeek did create what they said they created, I think that it's good for the AI industry, believe it or not. I think it'll make it grow more exponentially in the future if they did what they said they did. So I don't necessarily think it's terrible. I think it might be bad for some chip companies, but I think the lasting effects are going to be negligible. But who knows? Yeah, so a split, guys, is pretty simple. If a company gets too expensive to where the company themselves thinks that the share price is going to be unaffordable, like Netflix at 1,000, Tesla at a couple thousand, Nvidia over 1,000. It's self-explanatory in terms of name. They split it into multiple pieces, right? So like a 1 to 2 split means that if something's $1,000 a share, they're going to now make it $500 a share, and they're going to give every person that had 1 share of ABC stock now 2 shares. So if you had 10 shares and it was a 1 to 2 split, now you're going to have 20 shares, right? So the structure stays the same. The market cap stays the same in that regard. The price is cheaper and more affordable now, though. And the reason sometimes we get a bullish reaction from splits is because more people are able to afford said stock. It's cheaper in price. In turn, more people are able to afford it. So that's what a split is. A reverse split is kind of the opposite. And you only really see reverse splits in terrible, horrible, no good, very bad companies. That's the only time you see reverse splits, right? Because it usually looks something like, hey, you're going to get delisted from the NASDAQ if you can't bring your price above X amount, right? And so they say, oh no, and they reverse split the company. And it's kind of the opposite. They turn every 2 shares into 1 share, and they increase the price 2x. Anyways, NASDAQ popping back up a little bit, bouncing right there at that supported resistance level we drew at 2177, at 771 here. Let's watch 805s. If we were confirm this, yeah, we're going to bring that down. Yeah, you can buy fractions of shares depending on the platform. It just depends. Everybody's different. Lambo. Definitely Lambo. Lambo or Ferrari. Lambo's the obvious choice here. Ferraris are cool. They're a little bit too pompous for me, to be honest. Like, they try to do the whole Rolex thing where they don't let everybody buy them and they try to make them hard to get. But, like, in terms of coolness factor, Lambos are way cooler than a Ferrari. They look better. They look exponentially better. Is it true that we can find out how many shares are in market just by market cap divided by the cost of the share? Yeah, you can. You can find out how many outstanding shares there are, or the float. The float and outstanding shares are a little bit different. The float is how many shares are available to the public to trade. The outstanding shares are all the shares, including insider-owned, executive-owned, stuff like that, right? Ferrari does not look better. Lambo looks way better. It depends on which one, though. Like, the top Ferraris. Okay, so this is, I guess, the easiest way to put it. The Lambo's base models look better than Ferrari's base models, right? Ferrari's top models look better than Lambo's top models. But in that regard, like, in terms of ones that I would be able to afford, I'd get a Lambo or a Ferrari all day. But it's subjective. Yeah, I hear ETH is running. At least some people are telling me ETH is running. ETH is running. Look at ETH. All right, so there's gold. Gold's kind of unchanged by it. There's ETH. 330, 3380s. I don't know. Let's ask chat. Ferrari or Lambo, guys. Ferrari or Lambo. I'd probably buy a McLaren. It's cheaper. It's cooler. You know. Yeah, I passed my blue belt test. I get my blue belt sometime once the belt comes in. I'm not technically promoted, but I passed it, and I'm gonna be. You know. Porsches are cool. The Lambo trucks are ugly too, bro. The Uruses, dude, I hate those trucks, man. Those are ugly. Like, I was talking to somebody else about it. Like, look, if I'm buying a Lambo, I want a freaking Lambo. I don't want an SUV hatchback. I don't want a Urus. Like, dude, there's no way I'm about to buy a Urus. Like, oh, let me spend freaking 300 grand on a hatchback? Absolutely not. You know, how dare you even assume? Like, again, I don't know. The only way a Urus is cool is if you write it off as a business. Like, you have to have your vehicle has to weigh over like 6,500 pounds to be considered a company vehicle now for you to get like write-off privileges for it. And so that's the only reason to buy a Urus, is if you really want to write it off as a business. Outside of that, no. Why is Nvidia running? Well, I don't because he's going to meet with the president. Jensen CEO, Nvidia CEO Jensen Huang is going to meet with the current president. That was just announced, and now Nvidia is popping up to 125. That's what it is. Do you like old money lifestyle? No. I mean, no, I don't. Honestly, and like I was watching something, right? And this is my issue, okay? I was watching something, like I like the show Succession. I haven't finished it. I'm only on season 2. If you ruin it, I'll ban you. But I was watching some YouTube video on it. It was like, yeah, you know, if you really want to look like you got money, you got to buy the most expensive thing. Like if a blue baseball hat from a designer brand costs $2,000 and you can get the same exact blue baseball cap somewhere else for $300, buy the, what did I say, $900 one, or buy the $2,000 one, because you always go for the more expensive thing. I'm sitting there like, who the heck believes that, right? Like, who actually listens to that logic? Like, hey, you can get the exact same thing but spend, 10x more? Absolutely not. Crazy, ridiculous. And I hope you guys aren't falling for that nonsense. You know what I mean? Like they are just trying to trick people into spending their money and wasting it. And it's like, yeah, if you got a jacket, if you can get the jacket for $2,000 and you can find a clone of that jacket somewhere for $300, buy the $2,000 one. Like, they're just people getting their money just taken from them in that way. Well, the difference there, Blaze, like I knew somebody would bring up Rolexes here, right? I understand. I get it. Market's flat. It's not doing anything. I'm rambling off about business or whatever I want to talk about, so y'all be okay. But the market is basically completely sideways. We got this range drawn here. We're waiting for the market to open up in 35 minutes. We're going to day trade live at the opening bell, so stick around. Don't go anywhere. We are going to trade live at the opening bell, chat. But the Rolex argument is this. Rolexes are comparable to the S&P 500 in terms of gains, right? At least the right Rolexes. If you buy one that's a very famous model with a nickname, the likelihood that it's going to go up over a long term is very, very high. Very, very high, right? And so Rolexes are different. Like, I'm not saying they're investments, but they typically retain their value at the very, very least, right? And when you compare that to even like a Louis Vuitton purse or a Fendi purse, they do not. Purses are not going to hold their value. They're going to lose huge chunks of their value as soon as you walk off with it. And so there's a difference, right? Rolexes retain value, and a lot of the time they go up in value. And so they're stores of value. And as long as you take care of it, you can essentially buy a Rolex, wear it for 5 to 10 years, and then sell it for more than you paid for it. Make money selling a really cool watch, right? That's a different thing. If you compare that to buying anything else in terms of like fashion or luxury, you're going to just lose so much money. People are buying super depreciating things. And so there's a difference. Yeah. Rolls Royce or Bentley? Well, Rolls Royce are cars that you're supposed to be driven in. Bentley is a car you're supposed to drive. And so Bentley. Unless I've got some driver, which I don't. I'm going to get the Bentley. I'm not going to buy either one of those cars. But yeah. Why'd he get banned? Yeah, it's a different market though. And again, it kind of goes to, so like, look, I'm not telling anybody to buy anything. But a lot of people think people who buy Rolexes are just flushing their money down the toilet. And I get understanding that. Honestly, I used to be that way. I used to think it. Until you start researching it and looking at it and looking at the prices. Like, look, I'm going to show you guys a graph of Rolex prices over the last 8 years. Okay, this is a graph of Rolex prices over the last 8 years. All right. Where'd it go? There it is. All right, so these are Rolex prices over the last 8 years. So in the last 8 years, 7 to 8 years, Rolexes have gone up almost 70%, right? Average that, it's what, 7, 8, 9% a year? Okay, that's comparable to the average gains of the S&P 500. And if anything, like I said, Rolexes are now in a pullback state where they've pulled back heavily. There's logic behind this. The logic is very easy. Following 2020 and the stimulus checks, people spent it on, luxury stuff. And so it made Rolex prices spike. Once the Fed started being restrictive and taking money away from the economy through quantitative tightening and high interest rates, we had a big correction back. But this usually is typically a good place to buy, right? Like buying dips makes sense sometimes. And if you look at a longer term graph, it's even more so like this, right? Like that's the flow. And again, it moves similar to the S&P 500. I wouldn't say it's as good as the S&P 500. But again, like if you bought a Rolex watch 30, 40 years ago, you probably paid what, like $500, $600, $700 for it. That same Rolex watch today will be worth $10,000, $12,000, most likely more, honestly. So they've gone up a lot. And so it's not as bad as people think it is. And as long as you take care of it, you could wear a cool watch, probably make money doing it too. About Intel. Yeah, Intel's had a really look at my support and resistance levels though. I am getting a lot of confirmation in these levels, and this is what I mean. Like once I have confirmation in these levels, I start to respect my levels that I see on a chart. So again, we drew these earlier before most of this, and look at that, more confirmation in it. We're gonna wait though. Like I don't think there's much edge here, so I do have to kind of wait for the opening bell. So we're gonna stick around and just wait for some edge, hopefully. But yeah. Again, subscribe, guys. Help me hit 155K. We're like 300 subs away from it. Very close. Hey, what's up, Maria, Corey? Intel's starting to come back. Buying a rare Lambo as an investment. You can buy a rare car as an investment, right? Like there's some cars that you can buy that are maybe justifiable. A lot of variants. Similar to watches, but you could probably find some of them. You're gonna need, again, taxes are gonna be, kind of change. Margins are gonna be like insurance, taxes, air cooled, air controlled environment to store it. Like you're gonna need a lot more maintenance costs there for a car. For a rare car, but arguably cooler, so like there's just different ways. Like smart people diversify their money into a lot of different stuff. Like for me, and again, I'm not even claiming to be some great guru expert. I have no idea what I'm talking about, but I tend to like buying the NASDAQ. Do not copy me. I'm not an investment professional. I tend to like buying the NASDAQ, the S&P, the Dow, gold, silver, real estate investment trusts, some bonds, and then some other investments like Pokemon cards, Rolexes, stuff like that, as well as crypto, like Bitcoin a little bit. But again, the percentages vary depending on it, but like being broad with your investments and diversifying in a lot of different areas is one of the ways you stay safe in it. Like even if one of those markets fail, we're still good in others, right? And so it's all about diversification there and buying things that typically go up in value. If you can get them at discount, and cash is king in that regard. If you can get cheap discounts, it's usually good. Like I bought a rental property last year and we got it for way less than it was listed for, and really way less than the assessed value of it. Just for being selective, putting in a bunch of lowball offers of different properties and hoping one hits, and then one did. And so there's just a lot of ways to do it. But again, the overarching point I'm trying to make is like if you do have money, don't buy depreciating assets. It depends on how much money you have. But I don't have FU money, right? Like I don't want to buy depreciating assets like that. Not at least not if I can help it. Pokemon cards is just an example. It's not something I go super heavy in. I buy my son some Pokemon cards that he keeps in cases that when he's 20, 30 years old, maybe they'll be worth something big. And so I'm just kind of those are for my kids. And they might not hit, and that's okay if they don't. It's just kind of a fun hobby that him and I have, If you want to join our Discord, here's the link right here. Yeah, completely free, doesn't cost anything. Just be careful. There's scammers there that pretend to be me, Mama Pawn. We'll never reach out or message you and push you to join or click any link. Like we're never gonna reach out and push that. And so again, just be careful. A lot of scams pretending to be us in the Discord. Yeah, we went to Collecticon in Houston like a year ago. It was a little cringe, though, to be honest, man. Like, I like Pokemon. I grew up on Pokemon. And I brought my son and my daughter and my wife. Jason Page, though, bro. Like, look, I'm not trying to hate on him. But, like, I don't know, man. It's like he sang the original Pokemon song, and that's great. But, like, he's out there charging people to sign cards like he's some super ultra celebrity, and I just can't get behind it. Cheddar John, yeah. Somebody yesterday had a hilarious one they posted. I know someone who bought an R34 GTR imported for Japan back before US was allowed to import. They made over 100% and got to drive it for years. That's cool. Yeah, I mean, I buy the old ones is what I buy. I buy the ones, like, if I can get first edition, I buy first edition. Even of, like, the regular cards. Those over time are going to become harder to find, I think. But who knows, man? Maybe they don't. Yeah, they really do, bro. Like, I got talked in. Like, I was trying to have fun with my son, and so I bought my son one of the OG fossil packs, right? Like, one of the old ones. It was like $400, bro, and I was trying to have it cool. I was hoping we at least get something holographic. But I opened it, and it was non-holographic, and I realized afterwards that what they do is they weigh them, and they sell suckers like me the ones that weigh less because it's less likely that they have holographics in them. And so I got basically by these guys, man. Never again. Now, what they do now with Pokemon cards is they use X-rays to look at what cards are in them before they sell the packs. If it's something that's justifiable to open the pack, they'll open it and sell that. If it's something that is not justifiable, they'll sell the pack to somebody like me for $300-$400 or whatever it is, and make their money that way. And so that way they know what's in them. They don't have to open them. And that's happening a lot with Pokemon and card packs as well. It's just X-rays. All right, guys. Hey, we're not trading right now because the market's basically flat. Gold's pushing up, though. Look at gold. PCE data came in completely flat as expected almost everywhere. 0.2% core PCE month over month. 2.8% year over year for core PCE. This is inflation data. So when you hear Powell say we have a 2% inflation goal over time, that year over year PCE core data is what he's talking about. We're at 2.8%. He wants it at 2%. And so when you hear Powell say we want 2% over time, that's what he's talking about is PCE data, core PCE data. Yeah, well, when I grew up, I remember slanging Pokemon cards at the bus stop when I was like freaking in middle school. And I had a good binder of it. I don't know what happened to it. Somebody probably stole it, in all honesty. Yeah, so did I. I had a first edition Charizard. I had a Japanese Charizard. I had a bunch of cool stuff. I mean, he's talking about... So, Powell likes to look at PCE. Powell likes to look at PCE over CPI. No, it's bad. You shouldn't. Yeah, I used to play the video games. I used to download... I was a little nerd. I downloaded Pokemon ROMs and emulators, and some of the like Japanese games that hadn't come out in the US, I would buy the ROMs and the emulators. I would use an emulator and not buy and download the ROMs for free on the internet, and a lot of them would be badly translated, but it was fun, man. I used to play all those games. I still did. About 5, 6, 7 years ago, I played the OG Pokemon game again. All right, chat. Hey, 20 minutes until the market opens, chat. 20 minutes. Let's do this. All right, guys. So, yeah, we got PCE data out. We're going to be day trading live today, chat. See how it goes. Be ready. Let's do this. All right, guys. All right, market's coming down here. All right, stick around. Yeah, I mean, I still play a little bit of games, but not a ton. Like, I play UFC 5. ETH is almost at the recent highs of the day at 33.90 for ETH. Is Bitcoin moving up in sympathy? Where's Apple at? Apple's still churning higher. Yeah, I type almost 100 words a minute, but only on good days. Yeah, market's kind of flat. We're still waiting. We'll see what we get. Again, we got Chicago PMI in about 30 minutes. All right, again, we're going to get ready to day trade live. Be ready here, chat. Be ready. Have any firms reached out and offered anything in terms of what? I wish there was a way to... here, I'm gonna have to do this way. I'm gonna put micro levels up. I'm gonna stop linking it here, so I want to put micro. Um, 21,771, 21,803. 21,719. Okay, we actually got that. Alright. The only thing we need is the higher levels. 850. Yeah. Alright. Alright, we'll see how this goes. Yeah, I think tariff news, what's affecting Bitcoin, or what's affecting Nvidia is, again, Jensen is supposed to meet with the president, and yeah, Nvidia was optimistic from it. Employment. Yeah, I've had a couple of people try to hire me, but to be honest, I make more than they're offering to pay me running my YouTube channel myself. So, a couple people have reached out trying to buy the channel, but I'm not really interested in that either. Like, I had somebody offer me a couple $100,000 years and years ago, and I thought about it at the time because at the time it was smaller. I would be so bummed out if I had accepted that offer, dude. Yeah, so I had somebody reach out that was kind of like a jerk. He ran one of the big networks. It wasn't Top Step. Top Step's always been great. But he was just kind of like weird and kind of like difficult. And he was kind of condescending. And like now at this point when I look at it, like my channel gets like way more engagement and views than their channel does. And so obviously I was doing something right and they were doing something wrong. Should have hired me, man. I was willing to do it too. I wanted to work for a tech company because I did some software development and stuff. But in hindsight, I'm absolutely glad I didn't. Because if you look at like my channel's growth versus theirs, they're struggling, you know. And so in hindsight, it was the best decision not working for them. I don't know what they would have paid me. I just wanted to work for a tech company, to be honest. But yeah, got the last laugh. Feels good, man. It's all good though. I wish them the best. Like, I'm not, you know. They just gotta understand, like, should have hired me. If I can do better than them and it's just me and they've got a whole network of 30 people, then, you know, should have hired me, you know. But again, I'm glad I didn't. I wouldn't accept it now, of course. It'd be dumb. All right, guys. Hey, there's the 200 exponential right there at 744s. And again, just to clarify, this is not Top Step. Top Step is way bigger than me. They are growing crazy fast. Shout out to Top Step. Honestly, great content too. All right, again, we're sitting tight here. There's the 200 exponential, but it's also kind of a confirmed support level, so I'm going to add it here on the chart right about here. Still rebounding up. We'll see if we hold. We got a video today about how we find support and resistance levels. It's dropping sometime after the bell, so stick around. Yeah, the crypto channel, it's just hard to manage all these different options, so beginner crypto is kind of like, we just haven't, you know, had time. I think Cam's doing some other stuff, and it's just, again, it's hard for me to run and manage all these different things, and so I do have to be selective in terms of like what I spend my time on. All right, look at Nvidia still. Nvidia is right at the previous closing price. It's the level at which it closed yesterday. Nvidia is right there. It's at 125 or 124.60 or so, 124.65 roughly. So look at Nvidia start to test that level like right here. Like, look at it right here. So there's the level right there. Right, this light blue line, that's the previous closing price on Nvidia. Then look at the price on Nvidia. It's testing that level now. It just broke it. Now it's up to 124.70 for Nvidia. Let's see if it holds. Yeah, we got 10 minutes, chat. 10 minutes. Yeah, I asked people this the other day. Do y'all think we hit a recession in the next 2 years? Yeah, we cover crypto enough. And again, guys, we are on Top Step's funded account program today on Top Step X. There's no PDT roll in futures. They give you a demo. They test your skill with a demo. You pass the test, they fund you. You fail, you only lose what you pay for it. In this case, the base one's $50. A great way to learn how to day trade. If you fail the challenge, it has a practice account anyway. Comes with real-time data. And so if you were going to pay for real-time data in a demo account in futures, some of them are going to be in the same ballpark as the base package on Top Step, which is $50 basically a month, approximately $50. It's $49. And so the value is there. If you pass it, it teaches you how to trade, number one, in my opinion. And most day traders lose. And I think that's probably the same here. Most day traders will lose because most day traders lose regardless of where they go. In general, it's cheaper to lose on Top Step in their funded account program than it is to fund 5, 10, 20K into your own account and lose that. And if you pass Top Step, you get a 90% split anyway. You get to keep your first 10K in profit, and they've paid out almost $200 million in the last 4 years. And so they're the most legit one in the world. On Top Step X, there's zero commission as well. There's zero commission, and so you can take these tiny trades and still net profit. And so it's a great way to learn. And again, I'll put the link up. They're an affiliate of mine, though I'm biased because I get paid by them. I understand CFTC 4.41, hypothetical or simulated performance, have limitations, guys. I'm not an investment professional. I can't guarantee anything. And yeah, there's the link in chat if you want to check it out. Understand all this stuff. I do trade off stream. I can't guarantee anything. I might be terrible. Lose off stream. You're not going to see it. Not an investment professional. Anyways. Not this year, but maybe next. January of 26, maybe. Quantitative easing will begin, and instead of... When do you think we'll get QE? QE would make inflation much worse right now. I don't think we're going to do that. Not unless we see like drastic weakness in the economy. You know, if you're talking about if we go into a recession, yeah, if we go into a recession, we'll probably get QE. But the only reason we do that, the only way we do that, if we really had like bad unemployment, bad GDP data, weak payrolls, like we'd have to see really weak economy to start doing QE. What do you think of MicroStrategy? I think they're pegged to the price of Bitcoin. And it's done incredibly well so far. Do you teach John your knowledge on how to learn basics? I mean, I have some free videos, but again, I'm not an investment professional. I'm not liable if you lose. I don't mentor anybody. I'm not really claiming to be even good. All right, so look at that resistance level holding at 771 here. And now we're dipping all the way back down to this level here. Look at 751s. Look at that rebound. See, this is, again, I got a video on how I draw support and resistance coming out after this video, after this stream today's over. But look at that. And we talk about how we do this in the video. I'm not saying anybody to buy anything. It's bad. You haven't been here long enough to know I'm not going to tell you to buy anything, brother. I'm not sure. Arcane, I'm not sure, bro. What's it say when you try? Yeah, so I just purchased a reset and it was fine. And so, I don't know why it won't let you do it. It let me do it. I just tried. Might be your internet. Inflation data is already out, Z. It's at the bottom of the screen, bro. It's right here. This is inflation data. All right, chat. You guys ready? You guys ready, guys? It's time. It's time. All right, look at this rebound. That support level held. Here's the resistance level we got at 771.75. Nvidia is dipping all the way down at that previous closing price. Look at the level here. The previous close, this light blue line. We did reject exactly at that spot here. Again, we're a little bit too middle range, especially short term, for me to be interested in buying up anything. But we'll be patient and wait it out and see if we get anything good. Hey, good luck at the dentist, Tiny. All right, look, rejecting at the same top. And again, we got a video. Again, we got a video going out live after stream today talking about how we find these support and resistance levels. I mean, I like Disney stock depending on price. I don't really like it up here. I like Disney stock when it drops down to $90, which again, I've told people this for years. Like, look, I told people this Disney thing for years, right? And like, let me show you why. Okay, so remember how long I talked about Disney, and remember the prices I talked about Disney. Like, people get all weird about Disney, but like the reality of it is, remember, I talked about Disney and I said I like buying Disney. I probably said this at least 100 times. I like buying Disney when it dips from $80 to $90 a share. Okay, and I said this for years. I said this years ago. I like buying Disney when it dips from $80 to $90 a share. If I put up a yearly chart, this is precisely why. And I always try to ride Disney up into about 110, 120. Okay. And so again, here's $80 to $90 a share. Here's that range. This is Disney since August. Up to where? $120 a share. Okay. What I do is I look at levels that get bought up over time. $80 to $90 gets bought up very cleanly on Disney chart, long term. I can't guarantee anything into the future. Nobody can. Not an investment professional, not liable, all that good stuff. But I mean, in hindsight, can you blame me here? Like, look, it's such a strong historical like support level. Here's 80. Like, look at 80 long term and tell me it's not like historically like a really nice range to attack. This is why I like Disney. You know, but Disney makes people so emotional, right? Like, some people freaking, like, they just get emotional about it. But that range is beautiful to me. I've made a ton of money on that range too, to be honest. What did I have up here? I had Nvidia and gold, I think, right? Look at gold is up there. Okay, yeah. Well, yeah, that's true, Pew. But it's not about whether. I can always look at another stock and say, hey, guys, I could have bought Apple in 2000. I could have bought Amazon in 2000, guys. You know. But, like, hindsight's 2020. Like, the point is, did you make money? Did it go up? Was your thesis correct? All right, guys, we got 1 minute. All right, there's the opening bell, guys. There's the opening bell. Again, we're going to wait at least 5 minutes. I think we got a new resistance level built here, too. Let's see what happens. All right, there's the open. What's up, Freddie? I don't know. I might get rid of this level here. I don't really like it that much. We'll see if we can find some coinciding levels. Yeah, this one's fine. I like this. Let's see if it holds. Look at this huge rip up, though. What's rip it up? It's not Nvidia right now. Is it Tesla? Alright, guys, we're waiting. Trying to find some good price action. Wow, look at this green move here, chat. This is Tesla ripping up. Tesla up to 405s right now. Tesla up to 405s. Netflix is up big too. Wow. Look at this move here, chat. Crazy. What big stock is causing this run? Meta's up. It's not Apple. I'll put a high up here. Watch that. A little early to get in, but that's all right. We're going to add this 2 contracts here, see if we get a pop. It's way too early after the bell, though. I'm going to cut half of this. I don't like it. It's too risky. There we go. All right, we took that off. Locked in. We're now green on the day. I don't know if I want to add to this, though. Nvidia's starting to dip now. I'm going to cut it. All right, so we're kind of flat on the day now. We ended up making 21 and then losing 30. So we're down $10. I kind of like this dip, though. But Nvidia's turning all the way back down. Very strange. And the whole market is kind of too. What time is it? Okay, I still need to wait a couple minutes before I really start trading. Yeah, Netflix is going down. I should have stayed in the dip, maybe. Amazon, rip it up too, for sure. Oh, this is a 5-minute chart. Oh, that's why, dude. Nvidia's looking hella weak. I'm trying to size up here. I'm in too big of size. I'm going to cut half of that immediately, just because I don't like the risk. We'll figure out what we want to do on the rest. Took a lot of it off. We'll add a little bit more down here, see if we get a range down. Take a little bit more off there and get out the rest. Okay, so we salvaged ourselves there, even though it could have been bad. I'm going to wait. We're trading a little bit too early, I think. I got to wait and let the market calm down some. Still about flat on the day. But yeah, got to be a little bit more careful. Look at gold rip up too. Nvidia's coming down. Tesla's flying up 406. Amazon pulling back. Apple down on the day. Meta down on the day too. We got Chicago PMI dropping soon here too. I think I'm trading the wrong account here. I think I need a little bit more room. Yeah. All right. Could have stayed in that short. Probably done okay. So we're dipping down to that 200 exponential moving average, and it's a big level too. Look at that dip. Wow. Again, this is Apple dumping down to 244s at the opening bell. 244s. Meta's starting to rebound back up though. Look, there goes Nvidia fall. Wow. Huge turnaround. Nvidia retracing all the way back up. All right, so we're short. Took half off there, locked it in. Gonna take another half off down there, lock it in. Get out the rest down there, lock that in too. Just made about $30. See if we can keep grinding this up. Nvidia's still looking kind of weak, like it's breaking under levels here, but it's still kind of early. Tesla's still popping up some. Amazon bouncing back a little bit. Meta's bouncing back some as well here. All right, we're short again. Took another piece off. Oh man, we accidentally just scalped that move. I wanted to hold it a little bit longer based off of this resistance level, but that's okay. Meta's already back up, so I'm kind of bullish here. I knew it. I saw it coming, but it's all right. Maybe we get a dip, we'll buy it at the 200 exponential. Bad fill. It's all right. We're gonna cut it. Bad fill. Tiny trade, but bad fill. So. And look, you can kind of see how my levels are following too here. Like, watch my levels go here. Like, look at this. We bought it here, rode it up to here, attacking the level. We bought the pullback here to this support level, attacked it up here, took profit. And so you can kind of see how we're attacking the different levels we have. I usually buy this dip, but Nvidia's looking like it's breaking close to lows. We'll see if we bounce right here at the 200 exponential at 84. And there's the bounce at 84. Yep. All right. Nvidia retracing fast too, man. Look at that. But Tesla's still breaking highs. Yeah, thanks, Lolo. Yeah, it's coming. I don't know if Tesla's buy, hold, or sell. I'm not going to give out picks. I don't give out stock picks because I have no freaking idea what's about to happen in markets, guys. Genuinely no idea. Nvidia looks like it wants to come back though, and I think most charts look like a bullish setup here, but it doesn't mean it's going to go up, but it looks bullish on a lot of the Mag 7 stocks. Let's see if this resistance level holds. Look at that, confirming the resistance again. Even if it breaks it now, it's confirmed it like 3 or 4 times. Looks like we're strong though. I don't know. Alright, so we're moving up past some of my support and resistance levels. Yeah, there goes the strength. Alright, so far so good. So let's see if we get a pullback to this 803 level. It's confirmed a bunch. Nvidia just keeps on going though, so it might not have time to pull back to it. But let's watch the 803 level. Again, it's confirmed it a lot. Tesla's still ripping up though. Nvidia's still pushing up. Apple's breaking down though. But we have this level here too at 825s. Really about 824s, 825s or so. So that might hold as resistance. The 803s. There's 803s. Tapped it. Right off of 803s, guys. And right back up. Yep. Doesn't mean it's going to hold, though. It confirmed the level. But if Nvidia continues dipping, if Tesla continues dipping, it might just drag right through it. We'll see, though. Nvidia's kind of falling still. Apple's still falling, too. Yeah, so there's a quick little pop down. All right, watch 794s. I'm waiting here. Apple is really breaking down. It's at 242s now. All right, let's watch the 200 exponential now. We are starting to look red now on some stuff except for Tesla. See, Meta's still pushing up, though. All right, Nvidia's still breaking down, though, so I'm not saying I'm bearish right now, even though we're over some of these levels. I'm not saying we're going to pull back, but Nvidia continues to fall. Nvidia continues to fall. The other good thing, though, about it is that Meta's pushing up to almost 700 again. Meta's basically at 700 right now. Tesla continues to push, and Amazon just broke market hour highs of the day at 738.70s now. So, bouncing right off that 200 EMA. Look, we're back to that 803 level again, bouncing off of it. Let's see if it holds now, though. Again, Nvidia is what you want to watch, I would say. Nvidia, Tesla just broke highs again. So did Amazon. Meta's right at $700. Hey, see you, Tiny. Have a great day. Oh, yeah, Chicago PMI just released. I'm sorry, guys. It's pretty nothing, but Chicago PMI did just come out. Chicago PMI showed up. Oh, it hasn't even released yet. I don't see it out yet. Has it? Yeah, I think they're kind of late releasing Chicago PMI. There it goes, 39.5, lower than expected for Chicago PMI, 39.5. Nvidia ripping back up, though. So is Tesla, Amazon. 39.5 for Chicago PMI is what showed. All right, so we're still heading back up. I think we got a lot of confirmations in this level now too. This 823, 825 level right around here. I think we got enough confirmations to maybe justify it. But as I say that, we're kind of ripping all the way up. Watch 837 highs now. All right, we're still heading up. All right, still heading up again. Watch 837s. We've kind of slowed our trading down, in all honesty. Yeah, we got to kind of wait. We're going up to 837s. Rip City, yeah, we're moving. Again, Tesla helping us, Amazon helping us, and Meta helping us. Meta over 700s now, still going. All right, guys, we got a couple minutes left. Buy the pullback for sure. I don't know yet. We're still rangy enough to where I'm a little indecisive. Nvidia's still down there. Hello? Hey. Okay. Okay. Alright. Alright. Alright, love you. Bye. All right, guys. Yeah, so again, I mean, what did we say? We said 837, chat. 837. 837. Pretty easy. All right, chat. Don't copy my trades, bro. Don't do it. All right, guys. Yeah, 803. We finally broke. Here's 850 up here. We're still ripping up, guys. Amazon up there. Meta up there, too. All right, the music is so soothing. We're trying over here. We're trying. Here's 850s. I don't want to short the bull market, though. Look, there's 850s tap. All right, there's 850. Rip over it, man. We're a little bit too strong. I'm just kind of sitting tight and waiting. There's 866. I'm going to short this. And we're out. Very quick little scalp there because it just went so quickly in my direction. And this is why levels are important. Look at that. We had 866. Literally tapped exactly that. All right. All right, guys. Still sitting tight. There's that 866 level. But again, gold's still moving up. Tesla kind of found a little top at 415s. Meta pulling back a little bit. Apple still dipping down. There's 866. All right. So again, 866, guys. You're welcome. But don't copy me because I have no idea what I'm talking about. We're green on this one on the day. Market's been flying up. We'll see. Amazon pulling back to the volume weighted average price. Tesla trying to here.
Almost ready, guys. What are you guys doing? How are you guys doing today? Are y'all green or red? I'm trying to be like really selective today, and I kind of have been. All right, so we did bounce at that 825 level. We're up to 850. We might reject that level, but look at gold rip up too. Again, Tesla's still kind of creeping towards the highs, and Meta's pulling back a little bit. You want an editor? I mean, message me, bro. Nvidia creeping up towards the previous closing price now. Look at this rip. Back up to 866. We'll see if it holds. Gold flying up over. Is this lifetime highs? Let me see. Not quite. Yeah, gold reaching close to all-time highs. It's getting very close. We broke 866. 875, 874 looks like a level, though. Still ripping up to 880s now. Making a move. Nvidia creeping higher too. Beginnertrading@gmail.com. Although please don't ask me to click on any files or links. I'm gonna need a lot of verification before I click on anything, bro. Yeah, PCE data came in flat, which is probably good. People might have expected it to be much worse than expected, is what I'm leaning towards and assuming here. All right, so now we're going up. Watch nines. 9 might be a level I haven't drawn yet, but we're watching nines. Beginnertrading@gmail.com. R7. If you really, again, I don't know if I need an editor, but I'll talk to you about it, man. Maybe. I've made the worst trade ever on Tesla. Yeah.
Yeah, we're kind of waiting. We're in a really consolidated point, but the market just loving life right now. All right, guys, we're almost there. Are you guys ready for the video? We're gonna do a video premiere now. We're gonna do a video premiere now, so just be ready. All right, so we hit 904s. I'm just kind of sitting tight, guys. Yeah, it's a huge move. Sorry, we're trying to finish this video. All right, still pushing up. Watch 914s. Still moving up here, guys. beginnertrading@gmail.com. Let's see if we start to correct back down. Anyways, guys, we are going to pivot over to our video premiere. We told people we were coming out with our video on how to document support and resistance. That's what we're doing today. We got a video going live very soon on how to document support and resistance. And so, yeah, we got a premiere going live. The video is going live right about now. Let's see.
Yeah, so again, I'll see you guys over there. Make sure my time zone is right. I'm pretty sure. Yeah. And again, this video is going live now, so stick around, guys. You won't have to go anywhere. If you see my levels being accurate and you're wondering how I got here, in this video, we talk about how. We talk about how we got here. And so... So again, if you guys want to see it, be ready. Here we go. Yeah. Let me mute the music real quick. As soon as we close down the stream, it should immediately bring you there. All right. Remember, though, guys, I have no freaking idea what I'm talking about. Yeah, we got a video. OpenAI is going to launch new O3 mini model today in response to DeepSeek. Interesting. So again, they're going to be doing a mini O3 mini model today in response to DeepSeek, according to Wired. This might make Nvidia pop too. Again, this is the news. I'm going to put this up in chat. And yeah, I'll see you guys over there. If it doesn't bring you to the video for whatever reason, here's the link. All right, guys. Yep, it's premiering right now. It's doing a countdown. So yeah, I'm gonna start the video now, guys. Hey, I'll see you guys. Have a great weekend. I'll hang out in the chat of the new video premiere for a second. Have a great weekend, guys. I'll see you guys later. As soon as I close this stream, it's going to immediately bring you to this video premiere that we're doing that talks about strategy and systems and everything. So, yeah, I'll see you guys there.